We are starting a new chapter, chapter 4 in our book T.S. Grewal, Change in Profit Sharing Ratio Among Existing Partners. Now, this is a very important chapter considering that the concepts, the points which we are going to understand and study in this chapter is applicable in chapter 4 and chapter 5. From chapter 4 and chapter 5, mostly one 8-mark question is coming in the board exam. So to understand those chapters in a better manner, it is important to understand the chapter 4, that is change in profit sharing ratio among existing partners. The steps which is involved in solving the questions in chapter 4 are applicable in the next two chapters, okay, that is admission of a new partner and retirement of a partner. To understand the theory part also, this chapter is easier as compared to admission and retirement. Okay, so here in this video we will be discussing about change in profit sharing ratio among existing partners. We can say that this is the introduction video of the chapter. Now the first term which comes is reconstitution of partnership. Now, as discussed, partnership is a relationship which comes into existence, okay, when the partners enter into any kind of agreement. They all should be above the age of 18, okay, and it should be entered to do a legal business and share the profits of those business. Now, whenever there is a change in the agreement or the partners decide to change the agreement among themselves, then the old agreement will come to an end and a new agreement will come into existence. So we can say that it will result in reconstitution of partnership. Like here the paragraph says that any change in partnership agreement gives rise to change in the relationship among partners. It is called reconstitution of partnership firm. As a result, now this sentence, the existing agreement comes to an end and a new agreement comes into existence, and thus the firm continues. For the outsiders, the relation with the firm do not change, but among the partners, due to the change in agreement, the relation will change and it will be known as reconstitution of partnership. Now the circumstances when reconstitution of a firm takes place. The first one, when the profit sharing ratio among the existing partners change. This point we will be discussing in this full chapter, okay. Then comes admission of a new partner. The next chapter deals with this point. Then retirement of an existing partner, death of a partner. Our 6th chapter will be related to these two topics and almost same. On amalgamation of 2 or more partnership firms. This is not in our syllabus, but you have to remember this point as one of the circumstances when reconstitution of firms takes place. Okay, there are 5 points. First one, change in profit sharing ratio of existing partners, chapter 4. On admission of a new partner, chapter 5. Retirement of an existing partner and death of a partner, chapter 6. Okay, and then amalgamation of 2 or more partnership firm. This is not as a chapter, just a one point. If it is asked what are the circumstances, you will have to name it. Okay, now the point, change in profit sharing ratio among the existing partners. Okay, the partners of an existing firm decide to change. Like there are 2 partners, earlier they were sharing profits in the ratio of say 3:2. Okay, one partner was getting more profit and another partner was getting less profit as compared to the first partner. Now in future they decide to share profits equally. So it will result in change in the existing profit sharing ratio. The old agreement will come to an end and a new agreement will come into existence. Okay, so see what is the paragraph saying. The partners of the existing firm may decide to change the profit sharing ratio as a result of change in their capital contribution or due to any inability to discharge the duties of the firm. It may be any firm, okay, or earlier one partner was not able to contribute much, now he is also contributing equally, so they decide to share the profits equally. It can be any condition due to which the partners decided to change their profit sharing ratio, okay. Now see, as a result, few partners may gain or others may lose, okay. The total share will, the total of the profits will be always 100%, okay. So if one partner profit is changing, profit sharing ratio is changing, that means he is either losing or he is gaining. It is the case with others also. So some partners may be gaining in the profit sharing ratio or some may be losing their shares. So it amounts to, the person who is gaining, we will say that it amounts to purchase of share of profit, and the another person is selling the share, okay. One is gaining, another is sacrificing. The partner who gains due to the change in profit sharing ratio will compensate the sacrificing partner, okay. The gaining partner will compensate the sacrificing partner on the basis of the value of goodwill, okay, on the basis of the value of goodwill. This is also one point which we will discuss. You all have studied the valuation of goodwill. Now in this chapter we will also study the accounting treatment of goodwill, okay. Now see, following issues. At the time of reconstitution, following points must be considered, okay. I am saying using the term reconstitution of firm, okay, partnership firm. It may be change in profit sharing ratio, admission of a new partner, retirement or death of a partner. Following points will be considered. Following adjustments must be made, okay. First one, we will determine the sacrificing ratio, okay. We will determine the gaining ratio, or we can say we will determine the gaining and sacrificing ratio. Then the valuation of goodwill will be done and the accounting treatment will be done, okay. Valuation and accounting treatment of goodwill is the second step. Then if any accumulated profits or reserves are there, it will be distributed among the old partners, or we will the accounting treatment will be done. Adjustments of reserves, accumulated profits and losses, because these reserves, accumulated profits belong to the old partners, so the adjustment will be done so that no partner stands at gain or loses, okay. No partner should gain or suffer loss, okay. That's why these adjustments are done. The assets and liabilities will be revalued, and if there is a profit, it will be distributed among the partners. Again, why we are doing that? So that no partner stands at profit or loss, okay. Then adjustments, if new further capital is to be brought or capital is to be withdrawn, that adjustment will be done at the end. Again I am repeating, okay. First we will calculate the gaining ratio, sacrificing ratio, or the new profit sharing ratio. Then goodwill will be valued and the accounting treatment will be done. Here the journal entry will be gaining partner to sacrificing partner. Gaining partner's capital will be debited and sacrificing partner will be credited. That is, the gaining partner is compensating the sacrificing partner on the basis of the value of goodwill. Then the accumulated profits and reserves will be distributed, okay, or adjusted, okay, whatever the condition the partners decide, okay, so that no partner stands at any loss or gain, okay. The old profits and losses will be distributed or adjusted among the old partners because it belonged to them. They worked hard to create this accumulated profits and all reserves. Then the next step will be assets and liabilities will be revalued, okay. Assets may be recorded at the old value, old book value. Now they may be available at a higher price or a lower price, so that at the time of reconstitution no partner stands at gain or loss. Revaluation of assets and reassessment of liabilities is done, and whatever profit or loss is there, it will be distributed among the old partners. Then last, capital will be adjusted. Now see, the first point we are discussing, meaning of change in profit sharing ratio. A change in the profit sharing ratio implies a purchase of share of profit by one partner from another partner. Okay, like say one partner is sharing 60% and another is sharing 40%. So if in future they decide to share equally, that is 50-50, in that case the first partner who was getting 60% will now get 50%. That means he is sacrificing 10% of his share, and the second partner is gaining 10% profit. So we can say that the first partner is purchasing share from the second partner. First partner is gaining and the second partner is sacrificing. Who is a sacrificing partner? Whose share decreases due to change in profit sharing ratio. Gaining partner, whose share increases due to change in profit sharing ratio. New profit sharing ratio after the adjustment of gain and sacrifice, okay, in which they are going to share the future profits, okay, will be known as new profit sharing ratio. The sacrificing partner share is decreasing, gaining partner share is increasing, and the new ratio in which the partners are going to share profits will be known as new profit sharing ratio. How to calculate sacrificing ratio? Okay, the formula is old share minus new share. Okay, we don't write old ratio minus new ratio, it's old share minus new share. Gaining ratio, new share minus old share. Okay, this is important, the bold letters. Okay, sacrificing ratio is equal to old share minus new share, and gaining ratio is new share minus old share. We will take one illustration. See, earlier the partners were sharing equally and they decide to share the future profits in the ratio of 3:2. So the first partner, old ratio is 1:1 and the new ratio is 3:2. Sacrifice of A. You can use either sacrificing ratio method or formula or gaining ratio formula. Okay, so sacrifice of A, old share minus new share. Old share is old share is 1/2 minus new share 3/5. So when we take LCM of 2 and 5, it is 10. So 5 minus 6, it's minus 1/10. So it's coming in negative. So we can say that A is gaining. Okay, that's why in bracket it is written gaining. In case of B, we are using the same formula, old share minus new share, 1/2 minus 2/5. LCM is 10, so 5 minus 4 is 1/10. So B is sacrificing. So we can say B is sacrificing 1/10 the share and A is gaining 1/10 share. Okay, I am stopping the video here. Just go through the theory part properly. Try to understand this illustration, and similar to illustrations I have given at the end. Try to solve it. Please go through the theory part properly. If you any doubt, you can message me.